So good morning to those joining us on Facebook Live, and also those that are intending to join us on Zoom. We are getting started. So this morning we are looking at how the depreciating kwacha is affecting your business. What is causing all these changes in the currency? Why are we seeing an ever falling kwacha? So I'm with Trevor Hambayi. He's a development analyst as well as an economist who's going to take us through this discussion this morning. And if you have any questions, you can use the chat box on Zoom to ask any question that you might have. Also on Facebook, you can use the messenger to post any questions that you might have this morning. And so I would like to welcome my guest, Mr. Trevor Hambayi. Good morning, Trevor. Thanks for joining me this morning, and briefly introduce yourself. Sorry for that noise. I don't know if people can hear that thing. Sorry for that noise. Trevor, can you hear me?
Yes, I can hear you. Good morning, Mukonke.
Good morning.
So, a quick introduction. My name is Trevor Hambayi, and my background basically is that I have got an undergrad qualification in agriculture economics, and my graduate qualification is in finance, and my PhD is as well in finance. And I'm usually in the space to work around SMEs. I've got a book publication on SME access to finance in Sub-Saharan Africa, which is on Amazon as well. But I've been in the private sector for over 20 years. And so when I do speak about these issues, it is something that I am speaking from experience, that I've actually experienced what the entrepreneurs are going through. So we will speak about the issues of the exchange rate. You know that in the last week, our exchange rate hit the 20 kwacha mark. Although this has been a gradual issue that has been coming through, I think this has been developing over the last month. In the last month, it has been moving from 19 to 20. And to do this, I will share with you a couple of slides in terms of what is driving these factors. Let me just bring that slide up.
Okay. So for those joining us, as Trevor is preparing a slide for us, just to show us how the movements in the kwacha against the dollar has been for the past 12 months. So if you're joining us on Facebook, thank you so much. If you've got any questions in terms of how the foreign currency movements are affecting your business, please let us know, and then we're going to consider those questions at the end of today's program. My name is Mukonkela, and I'm the host of the Ndalama Insights Business Show. For those of you who've heard me on radio, we are now doing these programs on Zoom as well as live on the Facebook page. So thank you so much for joining us this morning.
So can you see the slide?
Not yet.
Not yet, because it's actually showing on my screen.
Just try to share it again.
Okay, it's not showing, but let me run through the presentation.
Okay.
So the first thing that I wanted to do is share the exchange rate trend in the last basically 9 months since the beginning of the year. And what you do see for the last 1 year is that if we go back to September 2019, the exchange rate was at 13 kwacha. And it basically stayed around the 13 kwacha mark for the next 2 months until November. From November to December, it started to gradually go up, and it went to $15.42, 15 kwacha, 15.42 towards the end of December. After December, it was again fluctuating, but it was actually decreasing, and it came to around 14.50, for which it maintained until we got to March. And in March, with the COVID and a number of other factors, it started to increase from the 14 kwacha 50 until it hit 1867 at the end of, in the middle of April. From 1867 in April, it was gravitating between 1860 and 18 kwacha for the next 3 or 4 months until we got to August. At the end of August, it started to gradually increase from 18 until where we are now. It's gotten to 20. But there are key factors that this trend is actually showing, and I'll highlight that. The key issues that are driving our exchange rate in terms of depreciation of the kwacha are basically 5 factors. But the first one is foreign debt, is that our sovereign debt has put so much pressure on our exchange rate that we get to a position where we're trying to find the hard currency to pay back our loans in terms of interest, especially the euro bonds. So what you see in the last 2 weeks, what has been happening is that our Eurobond payment in terms of yields has been due, and this is what has been driving the pressure on the exchange rate as government is trying to find hard currency to pay this debt. You see this trend in the last times as well. The last time our payment was due again was in March, and that time we had exactly the same trend, that at the end of that period, the kwacha was depreciating because there was so much pressure for the country to find foreign exchange to cover this debt. The next one is our trade balance, which is our exports, is that we do not seem to be generating enough revenue from the exports of our minerals. And this has been putting pressure on the exchange rate, in that we do not have enough hard currency to cover our needs, and that we are importing more than we are exporting. This is also putting pressure on our reserves. That also determines what the exchange rate is going to be. The one other factor that also speaks to the depreciation of the kwacha against the dollar has been the capital flight, because of the international perceptions into the investment, especially into our capital market. So all the ones that are invested into the treasury bills and bonds have basically been liquidating their assets and taking these resources out of the country, and that creates capital flight, putting pressure on the exchange rate. And those are the key factors that speak to what is driving our exchange rate. So right now is that the demand for the dollar is a lot higher because of the fact that government needs a very big chunk of hard currency. I think at the moment the government is trying to make a payment of $180 million, our Eurobond payments. So then it speaks to all the macroeconomic indicators, that the macroeconomic indicators for the country are basically all depressed, which is our debt ratio, which is the biggest issue that affects the exchange rate, that our debt is almost 90% in relation to our GDP, which is inconsistent with international standards that we should not exceed 60%. Second one is our GDP, is that what you do find is that since 2015, our growth as an economy has been decreasing. And last year, at the end of 2019, we had gotten to 1.9% in terms of growth from 6%. And it is projected that for 2020, post-COVID, we will have a recession of almost 5%, minus 5% in terms of GDP growth. This is what is pushing the issues around the exchange rate. And what you do see is that from 2015 to the present, we have continued to have a depreciation of the kwacha from 6 kwacha to where we are now, 20 kwacha, which is more than 300% in terms of depreciation over that period of time.
I want to cut you a bit there, Trevor. In terms
Yes.
of a currency, how does it affect the inflation rate? What is the relationship between the performance of a country's currency and inflation rate?
Okay, so the depreciation of the kwacha in terms of the exchange rate, what does happen is that because we're an import-dependent country, when the inflation, when the interest, the exchange rate goes up, it means that all the prices of our commodities will also increase by that proportion. And when it increases by that proportion in terms of cost, it means that you require more money to be able to buy the same kind of item. And that is what is driving the inflation. And this is then reflected also in the interest rate. What happens is that because of depreciation of the kwacha, the cost of money becomes more expensive, and this is reflected in the interest rate. So what you do actually see is that interest rate and inflation are directly related, that an increase in the inflation will also come with an increase in the interest rate. We had a very interesting perspective just 2 weeks ago. I think the central bank actually reduced the monetary policy rate, but this did not reflect in the interest rate. So we are actually trying to counter active economic fundamentals in having to implement this. But the inflation rate is directly related with the interest rate.
Okay.
And then the last one is the impact on business. So the impact on business, firstly, from a business perspective, is that the first thing that happens with the increased depreciation of the kwacha is that there's a general loss of income. And the general loss of income is in the fact that, so if you've got debtors, if somebody owes you 10,000 kwacha, and which is from last month, and then there's a depreciation in the kwacha, you find that in real terms, the value of that 10,000 kwacha has reduced by that increase depreciation in the kwacha. So you lose income for any that you had actually generated. It also brings in an increased cost of business because the increase in the exchange rate means that most goods in the country will increase. So what you will see, generally speaking, is that you will have an increase in the price of fuel, you will have an increase in the price of domestic commodities, which is basically your food basket. And from your general income, you will have a decreased purchasing power for the same amount. So if you're earning 10,000 kwacha last month, you will be buying less things this month from the same 10,000 kwacha. If you're an import-based company, the same factors really come into play, is that because of the increased depreciation in the kwacha, the value of your dollar for the things that you import becomes higher. So you will have to increase the price of your commodity that you are selling for you to be able to maintain the same kind of profit. But what it does from a business perspective is that it becomes very unpredictable for you to price your goods. And this reduces your market potential because you have to continually increase your price depending on what fluctuations you have in the exchange. If you do not increase that price, what you will suffer is an exchange loss and the fact that you'll be selling your goods at less than the value that you're expecting to do this previous. And then the last one that I would like to mention is obviously in terms of the economic forecast for 2020 and 2021, is that our GDP growth is expected to go into a recession, and we're expecting to look at a -5% growth, negative growth. Our debt will still, in terms of our foreign debt, is that we'll be running at a risk of default because of the high challenges that we are facing as a country. And we expect that the exchange rate will continue to depreciate. As a business, there are two options that you can look at, which is basically the first one is that you must be thinking about creating an export base, which is where you're generating an income stream, which is in hard currency. This takes away the risk of your business under the fluctuating volatile exchange rate. But also you can hedge yourself. Depending on how you do this, you can use financial instruments. Other than the export base, you could also put a saving that is in hard currency. And I think those are the key aspects that I wanted to highlight around the exchange rates. So we can deal with the questions now, Mkonke, if there are any.
I'm on mute.
Okay.
Wanted to ask a follow-up question in terms of when you say you need to export base, what do you exactly mean for a small local Zambian SME? What does that mean? How do they turn their business into an export, based business? What does that mean exactly?
So as a small entity, it is not very easy for you to export, but you can do this through associations, and that is the important aspect, that you're able to get into partnerships with specific associations that are working towards exporting. What you really want to do is to create an income stream that is a hard currency, and you can only do this by actually exporting your goods and commodities. So there are a number of different areas, and generally speaking, at the moment, the best places for you to be able to look at in terms of exporting are the regional countries, because they have got less regulation in terms of requirements for you to meet export goods. But this is the general idea. What you're trying to do is to create an income stream in hard currency. And to do this, I think the easiest way is for you to be able to partner with specific organizations that are working towards this. The Cross-Border Association, the Zambia Association of Manufacturers, these are the entities that are actually working towards doing export, and those are the ones that you need to be able to partner with.
Now, many people have commented on this in terms of why we have a weak currency, and the fact that we base our economy, we import a lot, but we don't have companies or manufacturing industries that actually export products to other countries that can earn us this foreign currency, especially the dollar. I want to know what are your views on this, because we tend to talk about this often in terms of we don't have manufacturing industries, we don't export much, but we're always bringing in raw materials, buying in products that we are reselling. But we ourselves as a country have very little products apart from the copper and maybe a few other products, so rose flowers and others that we export, but that is not enough to sustain, the demand for this foreign currency. So what are your views on that?
So the issue around export diversification, we have talked about this for quite a while. I mean, this has been an issue that we've had since 1971 when we had the economic crash. But as a country, we have not done enough to be able to encourage exports out of the country. One of the things that you see is that a lot of countries are exporting goods to Zambia. And this is happening because we have created an industry that does not protect our own. For you to be able to export a product into South Africa, you will be paying a very high tax, which is trying to restrict a product going into South Africa because they're also producing the same product. What should happen is that any product that is imported into the country must be more expensive than a locally produced product. This is not happening in Zambia. You do actually find imported products that are cheaper than locally produced goods. And this is because they are not being charged any taxes to prevent them to bring in the goods. And this is the first aspect why we have not been able to develop our manufacturing sector to export. And secondly is that we also have not given the manufacturing sector a lot of incentives. A lot of countries, in terms of creating export base, actually subsidize the export of goods, that you're given certain incentives for you to be able to produce goods for export, so that your goods are actually cheap for them to be able to compete on the international market, which we have not done as a country. And then the third one is that we also have not created the platform under which we can export. What you see from China is that the Chinese is not that they are the largest exporting country in the world now. But all their products that they're exporting are actually manufactured by very small entities who are SMEs or backyard businesses, but they are given the support to be able to produce these goods. But there's a centralized platform to which they take these products for them to be exported, that when they consolidate this, they meet the quantities that are required to export. and we have not created these platforms for our small entities to produce. Because when you do get an export order, it will be so large that as a small entity, you will not be able to meet it. But if you're consolidated and there are a lot of you working for the same product, you'll be able to export. And those are the key aspects. But lastly, in terms of export, we also do not have what is called export finance. This is that when you do get an export, you need funding for you to be able to buy the products to export before you receive your payment. In this country, that option is not there. So there are a number of things that should come into play for the export industry to actually grow that is outside the minerals.
Okay, that's pretty interesting. Now, for the local SMEs, those that don't export and maybe don't even import, raw materials or products from outside the country, how do they get to understand this movement in the foreign currency, and how does it impact their businesses?
So for a local SME, respect whether you're importing or not, what you do find is that your cost of business is going to go up. The basic issues that you're having to incur, because most of the businesses that are working around you do use services that are import based, and they will increase the cost of their products, which is what you see coming. I mean, now we have all gotten used to the fact that when there's this depreciation in the kwacha, we are all wondering when the increase of fuel is going to come. And when that increase of fuel comes, then everything else is also going to increase. The cost of transport, the cost of production, everything just seems to go up. So you see that it doesn't matter what service. I mean, even if you're not a business, if you did walk into a shop, the cooking oil which you bought last week for 5 kwacha, you'll find that this week is actually 6 kwacha. And that is reflected because of the exchange rate. So the cost of business starts to go up, and any business would have known by now that their cost of business will be going up if this exchange rate continues to depreciate.
Let's take a look at what measures you can take as an entrepreneur. And I want us to look at this question from 2 angles, because it seems like as a business, you really have very little control over what happens to the movements in the currency. But what can you do as a small business who imports products from South Africa, from China, or even raw materials from these countries into Zambia? How can you implement control measures that do not adversely affect you as you trade outside the country? What can you do?
So there are no cheap ways to having to do this, but there are certain issues that you can do to hedge yourself. So, which is basically, if you're a small business and you are trading a particular product and you actually do import goods to be able to support your business, is that what you'll be looking at is that you want to be able to import the goods that you need for the year at the same time, so that they come into the country and you're holding them as stock, which you're using from there without having to recurring buy them on a monthly basis. This then guarantees the amount that you're actually going to pay, that you buy them at the same price, and then you can use the stock over the year. But for you to be able to do this is then you need to have access to, say, funding, which is, say, trade finance, that will allow you a working capital, which will allow you to have the goods for the year. And then after that, you are repaying on a monthly basis. The second thing, there are expensive ways to do slightly more expensive ways to do this, is that you could also hedge yourself, which is then you'll be asking your bank to be able to lock in a certain amount of money at a certain rate, which is called a futures agreement, that you've agreed to be able to buy from the bank a certain amount of hard currency for you to be importing your goods at an amount that is agreed. So you know exactly how much you are going to spend, which is the same thing with if you're a small business and you want to hedge yourself in terms of your rental. If you're renting this particular place, if you want to hedge yourself against the increases in this exchange rate, is that you want to go and pay your rental in advance for the year. Then you know that it doesn't matter what changes come through in terms of the pricing, your rental is paid and it will not change. But obviously, to do this, it means that you must have a very clear focus about what income you're going to generate, because that kind of money that you need to do this is that it needs to be borrowed money and you have to service it on a monthly basis.
When it comes to borrowing, I always look at the high interest rates that we have in the country. And without even thinking about that, I want to find out, do we have financial institutions that can actually lend to a small business who wants to buy in bulk because they want to hedge against the movements in the foreign currency? So they've decided we're going to buy our raw materials or products in bulk, put them in reserve, get financing from a financial institution, and instead start paying back, the financial institutions in terms of interest. Do we have those products available on the market?
Mukonki, the reality is that when you do actually ask about this from the financial institutions, they say yes, they'll be able to do this. But the reality is that it doesn't happen. Firstly, the conditions that they are going to give you will be so stringent to be able to meet them. They really want you to have a very clear cash flow to be able to do this. And then it becomes very difficult for you to meet this. And then they want landed property as collateral. And then you will have a very high interest rate to pay, which is a floating rate, which makes it very, very difficult for you to plan. So in essence, the true reality is that the financial institutions are there, but the interest for them, they've got no interest in having to support the SMEs because of the risks that are involved.
Wow. So what then? What are the options? What are the options? Because it sounds like, what do we do?
There are very few options other than the fact that you have to work towards having to have organic growth. And organic growth basically means that you as a business is trying to generate revenue from your own business and reinvesting it back into a business until you get to a point where you're actually having to have the resources to grow. But the key aspect is that it doesn't matter how small you are as a business, is that you need to have savings. So it doesn't matter whether you've got a small business, you always need to be putting away savings to build your capital base. And if you continue on this strategy, at some point you'll be able to reach to a point where you have got the resources that will support you. But also the fact that you do have the savings puts you in a better position for you to be able to negotiate with the financial institution to give you funding. That we need to be able to import raw materials, but for these raw materials to come in, we need 100,000. We have 50,000 of our own. Can you give us the other 50,000? Makes it a lot easier for a financial institution to support you. And you can only do this once you have put the savings together for yourself over a period of time.
Okay, so those are some of the things you can do as a small business. For those joining us on Facebook, good morning. Thank you so much. This is the Ndalama Insights on Zoom, as well as Facebook Live. For those joining us on Zoom, thank you so much for joining us this morning. If you've got any question, you can use the chat box on Zoom. If you are on Facebook, you can use the messenger or just a comment, and we're going to get the questions and allow our guests to respond to those questions at the end of this session, which is in the next few minutes. So Trevor, I want us to look at, it seems like many of the factors that have to do with the movement in the foreign currency really are beyond the control of a business. So when it comes to how do we take control of this depreciating or fall in the kwacha, what must be done to ensure we control this, considering the adverse impact this has on businesses, even households? You mentioned the increase in the price in the cooking oil if you go to a shop. How do we control this generally so that we have, businesses are not adversely affected, or at least we have some kind of stability? Because you also mentioned it doesn't make sense for a business person to be constantly revising prices, reacting to the changes in the foreign currency. So how do we create some kind of stability or even control this depreciation in the currency so that we, start reversing this adverse impact on businesses and households?
From a business perspective, that is a very difficult position. There's very little that you can do. This has to be addressed from a national perspective in terms of managing our macroeconomic issues, that government must create an economic environment that is conducive for business. As a business entity, you can obviously take some measures to try and mitigate this, like the ones that I mentioned in terms of hedging yourself, in terms of creating an export base. But business will have to work towards adapting themselves to the economic environment that is there. And it is important on government to be able to create that economic environment in having to manage our national debt, which is what is driving our exchange rate, in having to ensure that they cover the aspects around liquidity in the market, that the businesses are able to get resources to be able to invest into the business so that the economy can start to grow, which is going to increase our GDP growth, in having to deal with the issue around us having to increase our reserves, because our reserves basically determine the pressure that we have. And this is coming from us having to have a better trade balance in terms of a surplus, which comes both from the exports of minerals as well as non-traditional exports. And that is what is going to be able to create a balance which ensures that there is no volatility in the exchange rate. And that is the only way businesses will be able to thrive. Under this kind of economic environment, it's very, very difficult for any business to thrive. The success that you'll have this month is very possible that it can all be wiped out next month.
That's very true. The other discussion that I always hear is around creating manufacturing businesses, like I mentioned earlier. But my question is, who's responsible for ensuring we have a vibrant manufacturing industry that is export based? Is it the government, or do we have entrepreneurs that can actually take up that space? Who's responsible for creating these businesses that are going to, help in terms of exports, manufacturing, for us to create this vibrant economy that we're all looking at?
Okay, the ideal situation is that the economy should be driven by the private sector. Government should have no space in the private space in terms of business. And this is the biggest challenge that we've had in the last 5 years, that our economy now is crashing because government does not have any resources. And then what has happened is that because of the fact that government is the main player in the economy, the fact that they do not have resources also has now affected the economic performance. If government was restricting their responsibility to having to manage the policy issues of the economy, it would not affect us as much if government didn't have money, because the economy would still be running driven by the private sector. And it is very, very important that we move this paradigm to ensure that the economy is totally driven by government. If it was driven by government, it also makes it very attractive for government, because an economy that is driven by the private sector allows government to be able to get taxes from the economy. But now the fact that government has been running the economy and the economy has crashed, there's even no place for the government to go and collect taxes, because the economic players have also crashed with the government's strategy. And I think the issue around manufacturing, the issue around exports should be driven by the private sector, but government must make it, create the conducive environment for this to happen.
That's very true. And for those that are joining us on Facebook, on Zoom, I feel like the discussion around government needs to create manufacturing businesses and all that discussion really is pointed in the wrong direction. The government has a role to play, but I think we need to identify individuals that are already in the manufacturing sector that need to be, given that boost so that they can do better. and not looking at government creating other industries and then making sure that those industries grow. Because when you look at entrepreneurship, it's individuals, it's people that start businesses, and it's about identifying those businesses and individuals and ensuring that we are nurturing them and they are doing well and we grow as many as we can. So really the discussion should be around who's in this sector, who needs to be supported with finance, as you say. And I know, Trevor, you are very passionate about ensuring that SMEs have access to financing, which is also a very big issue. And so many discussions I've had around access to finance. You gave a very good example in terms of one way you can mitigate against foreign currency depreciation, which is by import as much as you can at once, and hope to get financing, to local financing to be able to pay back and avoid that risk or exposure to the foreign currency or currency depreciation. But all these are things that require support for a small business, support from financial institutions, a vibrant economy in terms of policy that the government is driving, but also in terms of who creates these businesses. Really, I think it's individuals, it's entrepreneurs, it's the Zambians that need to create these businesses and not look too much to the government to actually create these businesses. So I don't know what you have to say about that and your final remarks before we take questions from our viewers and those that have joined us on Zoom as well as on Facebook.
I totally agree with you, Mkonke. That responsibility to drive this economy totally belongs to the enterprises. And as entrepreneurs, we must be able to take advantage of that opportunity. So one of the things that I did mention in terms of hedging, which is where you are actually having to import all your commodities at the same time. The other option is that if you didn't have those resources, which you needed to be able to get from a financial institution, is then you can decide that from the income that you are generating, is that whatever income you generate, then you convert this amount into a hard currency. So you've got a dollar account where you hold these funds, so that when there's a change, you still have your currency, your resources in hard currency, and it will allow you to be able to buy the commodities that you need, which will be at a reduced price in terms of the cost, because you're not having to incur this volatility in the increase of the depreciation of the kwacha. It is also another option that you can consider, but this also speaks to the same thing that I was mentioning around savings, that all you're doing is that, yes, you are saving, but you're just changing your savings to ensure that your savings are in hard currency, then you do not have this exchange loss. And I think those are considerations that you can have. But I totally agree with you. It is a very difficult space to work in this country because of the lack of support in terms of financing. And it is a key ingredient to having to grow a business, that you must have access to finance.
All right, thank you so much. Do we have any questions? Those joining us on Zoom, I can see Steve, Alpha, Frederick, Emmy. Do we have any questions from you guys before I ask questions from Facebook?
Hello. Sorry, my hand is not visible on the digital hand. I can't raise it. Can I go ahead?
Yes, please, Frederick, you can go ahead.
Okay, thank you very much. I've been trying to follow the program, though my network was failing. I've tried to follow here and there, and it's an interesting topic. It's very true that indeed private enterprises are agents of economic development, and no doubt the government cannot develop the economy alone, so we need these private enterprises. And like Mr. Trevor mentions, yes, the environment is not really conducive. For some of us, we've been trying to make a contribution for some time now, but indeed the environment, we don't have deliberate policy, we don't have a conducive environment. And it's like the government also has stepped into driving the economy, which to me is like you have a player referee. You have a referee who is also involved in the game. Instead of the referee concentrating on officiating, then allow the players to freely, play the game without interference. So at the same time, it's like we have government officials who are also involved in private in private businesses, so to say, disadvantaging genuine entrepreneurs. So my question is, it seems, yeah, these debates are okay. We've been talking quite long enough, but where do we start from to practically make a difference in this arena? Where do we start from? Who is going to take the lead? Some of us, we are valuable. We're going to join forces, but who's going to lead us into making that transition or that transformation, that impact? Yeah. So it's good we are debating, but then are there practical steps that we can start taking? Are there specific doors we need to start knocking so that our voices can be heard, and then we can be given a favorable environment that is conducive for fostering private enterprises? Because indeed, we're in a hurry to create empowerment and employment opportunities for ourselves and for our fellow Zambians. I think that's my question. Where do we start from?
Okay, Trevor. I think to start with, before Trevor comes in, I would like to say having a platform like the Ndalama Insights Business Show, as well as the Facebook group that we have with over 2,000 members in the group, is a beginning. For me, it's a start because it's private sector driven. The Ndalama Insights Business Show, as well as the group, is not funded by government or by Donnerhead. It's a privately funded, group that is meant to drive these discussions. And so for me, I think that's a beginning. Yes, there are debates, yes, we are talking, but hopefully we hope that people and those that are in decision making are hearing us as we talk and are getting insights and ideas of how to create a vibrant economy, because that is what we are always talking about. So for me, I think that is our contribution as a firm, as Insight Partners Africa. This is our greatest contribution that we can have. I don't know what you have to say, Trevor.
I totally agree with you, Nkonki. But for Frederick, what I normally say is that the best place to start from is yourself. And that is the first place that change comes from. It comes from an individual person. So you start with yourself in terms of what do you think, where do you think the change should be coming from, and what do you think you can do to be able to achieve that change. Then you can start to look at who do you want to be able to partner with, who do you need to be able to collaborate with, who do you need to be able to push towards having to do this. I will mention to you that we are constantly in engagement in terms of having to speak with the policymakers, who is government, around the things that we need to do to be able to change the dynamics around supporting the business space, especially SMEs, because they constitute the major component of the private sector. What we do actually realize is that one of the things is that this change does not seem to be coming. The discussions in terms of the policymakers is that, yes, they agree with what needs to be done. But in terms of implementing these strategies, it just doesn't happen. And that is why it is important that if we are going to be able to achieve any of these things, we need to be able to find strategies that are going to be driven by the private sector, from basically having to conceptualize the strategy and actually having to implement it to be driven by the private sector. And I think that is very key in terms of having to do this, while we continue to try and get government to give us the policies that speak to a conducive business environment. But we can't stop. We just need to continue pushing this from the private sector.
Yeah, thank you so much, Trevor. So it's about do your part and also push for the right policies from the government, because government's role is about creating policies that create a conducive environment for businesses to thrive. And so we play our part, the government also play their part. Do we have any other questions from the other viewers and those that are following us? Okay, so if you have any questions, we can still continue our discussion on Facebook. You can drop a comment. We will post this video on our YouTube channel. You can also go back and watch it if you missed any element or any parts of it, and also comment in on YouTube as well. Before we come to the conclusion, I want to ask for your closing remarks, Trevor. In terms of the four in the Kwacha, what should an entrepreneur, what should a small business do right now to protect themselves and their businesses from this depreciating Kwacha?
So other than the strategies that I did mention in terms of you having to hedge yourself against this volatility, I think it is important that you are bracing yourself for the period that we are going into. The biggest challenge is that the factors that I mentioned that are affecting the exchange rate going into next year is that next year we are going towards an election year, and government has will have very little interest in terms of having to look after the economic factors rather than having to look after the political gains. And so what you will see is that for the coming year, we will have a more difficult year, and we expect that the volatility in the exchange rate will continue until post elections. And that is something as an entrepreneur that you need to take into perspective and start to create the kind of hedge that will ensure that you get past this period.
Yes, indeed. Right time for you. If you haven't started saving, create some savings and protect yourself for what we're expecting to be in terms of 2021. So if there are no other questions, thank you so much, dear viewers, for joining us this morning. Look forward to next week, Wednesday, when we have another interesting guest. I'll communicate the topic for next week, Wednesday, but do join us again. We will share further information in the group and on LinkedIn and other platforms. If you are not already following on YouTube, there are a lot of videos that you can actually access on how to succeed as an entrepreneur. So you can find my YouTube channel, that is Mukonkela, and join or subscribe to that channel so that you don't miss any episode of the Ndalama Insights. It's all about business. Thank you so much and have a great day. Thank you so much to you, Trevor. And I hope to chat with you sometime soon again.
Thank you very much, Mukonki, and thank you very much for those of you that joined us.
All right. Have a good day, everyone.